Welcome back to the portfolio, everyone. And today I'm going to go over 3 stocks I plan on adding to my dividend portfolio. These are 3 long-term core holdings I believe are going to do very well over the next 5, 10, 20 years. They're going to pay me nice, consistent dividends, and I really believe they're really going to be a nice addition to the portfolio and help it grow over the long term. So before we get into those top 3 picks, I'm going to share with you my current portfolio value. It's currently trading at a value at $43,964. Saw a slight increase in the day, up around $115 on the day, and overall portfolio is still down around 8%, down close to $3,500 into the red. So before we jump into those top 3 picks, I am going to ask, can you please like and subscribe? It really does help my channel grow. And these 3 picks are household names. They're nothing too speculative. They're not high risk companies. Those are those slow and grow, nice dividend growth companies that are going to be great additions to the portfolio, providing me with that quarterly dividend income, as well as some nice share appreciation over the long term. So I'm going to jump right into it. And the first stock on my list, coming from my exact thumbnail for this video, is of course Home Depot. So Home Depot is currently trading just shy of $250 a share. And if we take a quick look at the 5-year price chart, you can see the price is up 127% over the last 5 years. So the share price has grown very nicely in the past 5 years, and it has fully recovered from that dip we had in the market. Of course, there are other companies who may have not fully recovered yet, which might be better deals at the current moment, but I'm not trying to look for the best deals right now. I'm trying to make some solid additions to my portfolio of some core holdings that I don't have to worry about, and I believe Home Depot is one of the retail stores that will continue to operate over the long term, and I do believe they have a sound, very nice online platform that's going to help them improve their online sales as well. So with all these companies, we're going to do a little quick overview of their financials. I've done full research into these companies on my own, but I'm going to give you a short recap of why I'm choosing these 3 companies and take a quick look at their financials and show you the overview of some things you want to look for when evaluating companies. So the first thing we're going to take a look at here for Home Depot is, of course, their income statement. So some general rules of thumb when it comes to income statements and a bunch of different dividend growth companies when you're looking at them is you want to see increasing revenues. If revenues are increasing or they're declining, you want to figure out why, because you want companies to increase revenue year over year, to continue to operate and generate more income so they can provide consistent dividend increases and pay out you more capital over the long term. So we take a quick look here. You can see revenue from Home Depot. Year over year, we see nice increases every year. 88 billion up to 95 billion up to 100 billion, and year in and year out they have been growing their revenues very nicely. Of course, when revenues are growing, we want to see their gross profit and net income follow that same trend. You can see here gross profit has grown year over year to match that same trend, and if you scroll down you can take a look at their net income, which of course has also grown consistently over the long term. The next financial statement we're going to take a quick look at here is, of course, the balance sheet, which shows you a short-time financial position of the company. And a couple things you want to look for with all this uncertainty in the world right now. We want to make sure these companies that we're putting our hard-earned money into have strong balance sheets. The balance sheet shows a company's assets and liabilities, and we want to make sure that over the next 12 months, over the next short-term period, the company has enough assets on hand to pay off all of its current liabilities and continue to operate very successfully. So we're going to take a look at here of Home Depot's total current assets. So as you see here, they have total current assets just over $27 billion. And now we're going to take a look at their total current liabilities. As you can see here, their total current liabilities are just over $23 billion. So they have more current assets on hand available to liquidate in the next 12 months to cover all of their current liabilities and then some over the next 12 months, which shows the company, if anything were to happen, they can't survive the short term as well as the long term. So if we take a look at total assets, you can see over $58 billion of total assets. When we move down to total liabilities, around $60 billion in total liabilities. So that ratio isn't as great, but of course the current ratio over the short term is very good in my opinion. And I do believe this company will be able to boost up their assets and continue to grow and knock off some of those liabilities. The next thing we're going to take a look at here is, of course, we are dividend investors and we like dividend growth stocks, is of course the dividend summary. So you can see here they're currently yielding around 2.4%. I like to maintain my payout ratios of my dividend companies max at 75% payout ratios. So of course you can see here they are at a 60% payout ratio, so that is below my threshold. And with that little bit of a lower starting yield at 2.4%, you can see they have tremendous 5-year dividend growth at around just shy of 24% on average over the last 5 years. They have grown that dividend. Their dividend growth streak is 11 years, which is nice to see. They are continually growing that year in and year out, and that's what I like to see from my dividend growth stocks. The next stock, number 2 on my list, is another household name. JP Morgan Chase. So of course, this is in a different sector. Home Depot is in the consumer sector. This is a financial sector company. This, of course, a bank. And once again, you can see here, this 5-year growth chart is very nice. You can see a nice upward trend over the last 5 years at around 46% growth in share price. Of course, it has not fully recovered from the dip in the market, which is why I believe this is a nice little addition to my portfolio right now, currently trading just shy of $99 per share. They support a massive market cap at over $300 billion. Which means this company is here to stay. It's massive, and I do believe is one of the strongest USA banks out there. So once again, we're taking a look at their income statement. Once again, of course, like I said, you want to see growing revenues over the long term. You want to make sure the company's growing each year, expanding, generating more revenue year in and year out. And we take a look at JP Morgan's income statement here. You can see they are doing just that. Revenue year in and year out have been growing, which is very nice to see. We do see a little bit of a decline over the past year, but of course, we know what has gone on, and it's to be expected that revenues are down slightly, but I do believe they will be able to recover and continue to grow revenues over the next few years and into the long term. We're going to take a quick look at their balance sheet as well. And we take here, with this bank, we want to see that their investments are growing each year. Banks use their investments to generate income. As you can see here, year in and year out, their revenue and their total investments have been growing. So over 1.2 trillion, all the way up, going down to just shy of 800 billion, and it continues to grow once again. Another very important thing is here is you want to see their net loans going up. You want to see these numbers increasing over time. So you see net loans going up, which is a nice trend. As well, you want to see total assets going up over the long term, which is exactly what we see here. So this is another company with a strong balance sheet that I do believe is going to be able to survive not only the short term, but continue to thrive into the long term. And once again, because we're here for that dividend income, and that's a very important part of our portfolio, we got to take a look at that dividend scorecard. So we can see here the dividend current yield is around 3.6%, annual dividend payout at $3.60 per share, payout ratio at just above 70%, with nice 5-year dividend growth at over 16% average over the last 5 years, with a 9-year dividend growth streak. So this company has continued to grow its dividend very nicely. Of course, it is not a dividend aristocrat, which isn't great. I do like investing in dividend aristocrats, but this is the one company that I do make that exception for. Of course, Home Depot wasn't one either, but these are some companies that may not have hit that threshold yet, but I do believe have the foundation to one day hit that within, for example, the next 16 years for JP Morgan Chase and the next 14 years for Home Depot. I do believe they will continue to increase their dividends over those time frames and become a dividend aristocrat into the future. And the last and final stock on this list is a stock called, of course, Pepsi. No surprises here. This is a staple in a lot of people's portfolio. Once again, this is somewhat another consumer brand stock. A lot of debate happens out there between Coke or Pepsi. I evaluated both companies. In my personal opinion, I prefer Pepsi right now. You can see over the past 5 years, the share price has grown at over 40% over the past 5 years. And once again, it has not recovered back to that all-time high or that pre-market crash high, which is nice. So we are getting this company at a little bit cheaper of a deal than it was about 4 to 6 months ago. Massive market cap at just over $180 billion and current dividend yield just over 3%. So finally, we're of course going to check over their income statement and balance sheet. You can see here Pepsi's total revenues, 63 billion, just around 63 billion again, 63, 64, 67, 68 billion. So they were a little flat at the beginning, but they have begun to continue to increase their revenue year over year. Gross profit follows that same trend. If we continue to scroll down, we're going to take a look at their net income, which of course, how much income the company generates after expenses. So you see here, a little bit of an increase, then it has been flat over the last 2 years, which isn't great to see, and we have to do some deeper evaluation, and I did, and I figured out why that's happening, but I am going to make a video with a deep analysis on Pepsi coming up in the future, where I will actually go over why those years saw a little bit of an increase in net income, and why we led to decreases in the next future years after that. But we're going to jump right over to their balance sheet next, and of course we got to take a look at their current ratio, which is their current assets compared to their current liabilities. If we take a look here under their current assets tab, total current assets at around $24 billion. When we take their current liabilities, you can see just over $22 billion. So their current ratio is just over 1, which isn't the greatest. We do like to see current ratios at least like 1.5. But for Pepsi, for how strong the brand is and how long they have a dividend history and how strong the company has been a staple in the United States economy, I do believe in the company is going to be okay over the short term, and they'll continue to operate into the long term, continue to grow revenue, continue to generate massive amounts of income into the future. And last and finally, of course, with Pepsi, you got to take a look at the dividend. So Pepsi current yields is around 3.1%, payout ratio just below 77%. This is above my 75% threshold, but I am going to make an exception for this company. I do like them very much into the long term. A nice 5-year dividend growth at around 8% per year with a massive 48-year dividend growth history. So Pepsi is 2 years away from becoming a dividend king. Huge dividend growth history, huge pride in their dividend and sustaining that dividend growth over the long term. So these are all the reasons I like Pepsi, as well. I've gone through all the reasons I like these top 3 companies, and I believe adding Home Depot, JP Morgan Chase, and Pepsi into my portfolio is going to add some nice dividend income that I believe will grow year in and year out into the future, as well be followed with some nice share appreciation along with that. So I'm going to wrap it off by jumping back into the portfolio, where I say thank you for tuning in. I do appreciate you watching the video, and I look forward to catching you in the next one. Thanks.